please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Bellwether for tax reform, that's a little worrisome.
Closing out another very, very busy week. We'll wrap things up and look ahead to another busy week coming up on the second hour of the closing bell with Kelly Evans and company. Have a lovely weekend, Kelly.
This is their 8th straight weekly gain. That's the longest weekly win streak for both indexes in 4 years. It's 6 weeks straight as well for the NASDAQ. Nordstrom and Macy's were lower after retail came in as one of the soft spots in the October jobs report, shedding 7,000 jobs last month. With both major department stores reporting earnings next week, we'll take a look at what that weakness means for the sector and the broader economy coming up. Joining me now, Bill Smead from Smead Capital Management and Charlie Babrinskoy from Ariel Investments. Gentlemen, thank you both for joining me on this Friday. But first, let's take a quick look at the market and zero in on some of the biggest movers. The biggest Dow winner today was Apple, up about 3%, 2.6% it closed higher. Intel was actually the biggest loser, might be related to the Broadcom Qualcomm news we'll get to in a little bit here. Intel down 1.5%. In the S&P, Qualcomm was the biggest winner, unsurprisingly, and the biggest decliner in the broad market was CenturyLink. Let's take a closer look at Apple now, continuing higher after last night's earnings beat. Broad-based growth across all segments, iPhone, iPad, Mac, services. The stock hitting all-time highs today. Bill, what do you make of it?
Well, you make of it what it's been all along, which is an incredibly successful consumer company and electronic device company that's, you know, far and away the largest capitalization stock in the index and still has quite a bit of momentum.
You owner of it here?
We're not an owner. Like anything that's gone up tenfold in less than 10 years, I'm an envious non-owner.
Nevertheless, Apple's valuation has never been that high. You know, you could have gotten involved and made a valuation argument that was pretty compelling, right?
Well, you can, except that you've got two things at work, Kelly. There's always valuing the businesses, and there's also the mathematical probability of a gigantic corporation continuing to succeed constantly. You know, I think about professional athletes, and a great professional athlete will get injured or have a slump, and so we're 8.5 years into an uninterrupted bull market in stocks like Apple, and they haven't had an injury, they haven't had a slump. And if you're the person that steps in and corrects, you know, catches the next bear market in technology stocks, you very well might get damaged.
Charlie, what's your philosophy on that?
Yeah, I would say of all of these high flyers, Apple is the one with the real business. There was a time when it was selling at a reasonable multiple compared to an Amazon or an Alphabet or a Netflix. So this was a reasonable stock. I didn't buy it either, and I'm kicking myself for it. I think the one thing I would quibble with in your introduction is, sure, iPads and the other products were up, but this is becoming almost a one-product story. It's all about the phone. And if they ever have a hiccup on that and people don't want to pay $1,000 for a phone, I certainly wouldn't, then this stock is going to look overpriced in retrospect.
All right, that might be a big if, as you suggested. But let's get to the big deal news of the day. CNBC has confirmed that Broadcom is considering making a bid for Qualcomm. It would be a cash-and-stock deal worth about $70 a share. Both names spiking on the news. Qualcomm still around 61, even with a gain of 13%. Broadcom up 5.5%. And Bill, I mean, this has wide implications here. It would be the biggest technology deal of all time, the 8th biggest deal period of all time. The valuation at $90 billion is bigger than all of the tech deals that have been done so far year to date. What do you think?
Well, first off, we took a pretty hard look at Qualcomm in the last year or two and had extensive conversations. And when it comes to intellectual property and who is going to win the fight between Apple and them in court, we instantly threw it in the too hard pile because it's outside our circle of competency. On the other hand, were they a meritorious-looking company before this? Yes. Lots of free cash flow, great intellectual property, a long history of success, a lot of the things that we look for, and we just decided no. I will say this, these takeovers are synonymous with the late stages of a bull run in a sector. Go back and look at '87 in the you know, the R.J. Nabisco leverage buyout. you get a lot of this stuff in a very popular sector late in the cycle, and we think that technology is very late in the cycle.
Charlie, what would you say about that? And by the way, for Qualcomm shareholders, you know, even $70 for a stock that was trading at $80 3-4 years ago, it's interesting that I don't know if they would consider it, but if they would, that would tell you something.
Yeah, we actually agree here that the power is with the buyers of the chip technology, not with the chips themselves. So in these negotiations, the Apples of the world and the Googles of the world making their own devices just have the power. And it was a time when an Intel chip was so valuable with its own brand, and we just don't think the chip makers have that today. The R&D and the capital expenditures are just too high for us to see good returns long term.
And as you mentioned, Intel was the biggest decliner in the Dow today. Let's check out this Starbucks chart. Meantime, we told you about the earnings last night. They had the stock down about 7% initially after revenue missed expectations, but it turned around this morning. And in fact, Starbucks closed up more than 2%. The CEO, Kevin Johnson, was on Squawk on the Street today addressing growth concerns.
The fact that we were able to build over 2,000 Starbucks stores globally that are performing at higher annual unit volumes than prior generations in an era where retailers are closing stores at a record pace gives us confidence that there's affinity for the brand.
Bill, you guys invested in Starbucks here?
Yeah, we've owned Starbucks for the life of our strategy, and here's what we think is interesting. First of all, it sounds terrible. We'd like to own a lot more of it at lower prices, so we were kind of excited in the aftermarket yesterday, hoping that it would break down and we'd get a bargain, and instead it turns around. And we think it turns around because growth stocks have so obliterated value stocks, and value analysis has been of so little use in the last couple of years that at any growth stock with any hope or prayer, even on a somewhat disappointing earnings report, kind of turns around. I mean, Starbucks and Nike are both operating on the same wafting of growth stock outperformance. That's who's got all the money. That's who's got the inflows, are the index, which is a growth stock portfolio, and the other growth stock investors. Therefore, any little weakness in a quality, historically good long-term growth stock seems to be met by buying the dip.
Well, here's the flip side of that coin. The S&P financials were the biggest sector laggard in the market today. They were dragged down by insurers and lenders, and AIG was the worst performer there after its weak earnings yesterday. AIG closed down about 4.5%. Later tonight, we are expected to get numbers from Berkshire Hathaway. Charlie, what does this say to you?
That insurance is all about company-specific information. AIG was down big, but Progressive was up big. It's all about how have these exposures come in. It turned out AIG had underwritten a lot of stuff in California and was really hurt by those fires, where Progressive, people had been worried about California, Texas, and Florida auto losses that came in much lower than people's expected. So this is an industry where it's very company-specific.
What about rates, Charlie? How does that factor into the equation, too, here? I know that I think the 10-year moved a little bit lower after that jobs report this morning. Yeah,
today it didn't have much of an impact. This is a fascinating area. When money is cheap, you get a lot of money coming into the reinsurance market. Warren Buffett always complains that when interest rates are low, people underwrite reinsurance at way too low pricing. So tech generally, interest rates going up has been good for hardening the market and getting pricing better, and lower interest rates have been tough on the business.
That's for
Kelly?
sure. Yeah, quickly.
Your discussion before we came on about the home builders, I found it interesting. The one guy said we're a long way into the economic recovery. We are. It's the most anemic economic recovery, and we're early in the millennials, the largest population group, getting into the home building. So if he thinks that this is the end of the cycle, if he thinks that we're going to peak out at what would have been lousy recession levels in home building before these millennials get done, he's not doing his demographic mathematics.
So, Bill, I know this is a sort of an industry-specific call, but what does that mean for the overall rally and even for the economic expansion?
I think it might be like an 87, or it might be like ultimately when the tech bubble burst. The economy of the United States is on such good footing in relation to historical measurements like household debt to service ratio and other things, because the largest adult population group has yet to do the biggest borrowing of their life, which is a mortgage. By the way, the fear about the home builders on the deductibility and the limit on $500,000 mortgages. Well, we own NVR. They sell an average price of $383,000, and we own Lennar. They sell an average price of $400,000. How many people to ever take out more than a $500,000 mortgage to buy a $400,000 house?
Bill, where's your office?
In Seattle.
Okay, well, that's interesting, but Washington has no state income tax. We could talk about New Jersey and upstate New York. I was surprised to hear their congresswoman earlier today saying she supports the bill. The property tax rates, you know, for upstate New York, for a property value that's not even that high, it does sound like there's going to be some real negatives there.
You know, I love you for bringing that up. Steve Case wrote an essay in the Forbes 100th anniversary about what he calls the rise of the rest. If this tax bill becomes law as it is right now, we will see the biggest in-migration of people between 25 and 40 from the expensive coastal areas to the rest of the country. Case calls it the rise of the rest.
All right. I'm going to like that. I'm going to look for it. We got to talk about media stocks for a second, though, because Discovery got hit big again today. The second day in a row on cord-cutting concerns. It was down 4.5%. It's a 52-week low, by the way. Only CBS managed to close higher, nearly 2%, after its earnings report yesterday afternoon. Charlie, CBS says cord-cutting doesn't hurt it. Discovery says it needs to find some way of getting quickly into the streaming game and maybe closing this deal with Scripps.
Yeah, so I apologize for not owning Apple. I'm going to take some bows that Ariel owns a lot of CBS. And this is the same thing I talked about. It's very company specific. Cord cutting doesn't hurt CBS because they have a broadcast channel and an over-the-top channel. And they're doing very well in political advertising, which, of course, the cable nets don't really get nearly their share. So CBS has done very well while the cable nets have not. Probably the acquisition that they made of the big acquisition that Discovery made probably doesn't look as good when they bought Scripps. They get much bigger in a bad business. CBS and Meredith, the local TV station company, have been very strong.
All right. Thank you both. By the way, Bill, what jobs are these millennials who are moving from the coast inland going to get? Are they working from home?
Oh, you can take a software engineer to Kansas City to work on a mutual fund company. They don't have to be in New York. You can take them anywhere. All they need is water and Wi-Fi. Lastly, Charlie's right about CBS, and we own Tegna, which owns the largest CBS affiliate owner. And the same thing's true on the individual local TV affiliants for CBS and NBC. They also are defended from the cord cutting. All those over-the-top people end up wanting the people that have them want to watch their local news.
Guys, thank you so much. It's been a pleasure. Bill Smead, Charlie Wabrinskoy. Water and Wi-Fi are the new staples. And we know that's true. Apple shares hitting an all-time high today after its big earnings beat and closing in on that $1 trillion market cap. Growth in China, a huge part of the profit boost. Up next, we will discuss whether the release of the iPhone 10 in China can keep that emerging market momentum going. Plus, retail jobs falling for the 8th time in 9 months. We found that out this morning. Find out how the retail job drought could impact the economy coming up. And on this Jobs Report Day, we want to hear your worst job interview story. Let us know on Twitter, Facebook, or send us an email, and we will reveal the best stories later in the show with a little. Apple shares hit an all-time high today after beating on earnings yesterday. Shares up about 2.6%, $172.50. They see growth in Greater China after a challenging past couple of years. 12% revenue growth there. CEO Tim Cook addressed this in last night's earnings call.
The China rebound was broad-based across the products. And so we just had a phenomenal quarter on iPad, on the Mac, on services, on Apple Watch, on iPhone. I mean, we're firing on all cylinders.
All right, can that growth continue into next year? Joining us now are Tom Dotan from The Information and Ryan Reith from IDC. Guys, thank you both for joining us. Tom, you know, the China issue has been a big problem for them, hasn't it? Is this enough to kind of quell concerns in that area?
I would say it's too soon to tell. I mean, investors are very sensitive to anything that's happening in the China market because it's so essential to Apple's growth, specifically the iPhone. Apple's invested a lot in terms of building stores and distribution in the area. So if you listen to what Apple has to say, they see this recent quarter and the success there as a result of that investment. But I really do say it's too soon to tell with only one quarter to look at.
Ryan, what do you guys see as you look into 2018 for the Chinese phone market?
Right. So as a whole, we look at the Chinese phone market rebounding slightly to about 5% growth. But we're actually expecting Apple themselves to grow much faster than the market itself. So we're expecting close to 20% growth for Apple with its iPhone business in Greater China in 2018.
Ryan, if they do, I see you guys have their current market share. It's somewhere around 12.5% in that country, which is not huge, and it's one of about 5 major players. What would 20% growth do? Are you increasing market share dramatically if they can achieve that?
Right, so the 12.5%, just to be clear, is globally. That's where Apple kind of stands right now. I think what we're seeing with Apple with regards to China is their last real big cycle was around 2015 when they launched the iPhone 6. Right, we saw an enormous surge in buyers in that market, and then things slowed down. So what we're looking at is basically those buyers that are on either a 2.5-year or 3-year refresh cycle that are ready to purchase iPhones. And as Tim Cook mentioned, there's also strong sales from iPad and also Mac as well. But yeah, just to be clear, most of these sales are happening in the Tier 1 cities, not the rest of the population where most of the mass volume goes.
Yeah, Tom, maybe their market share in China is actually lower than that figure that I cited earlier. So again, what is the significance? You mentioned how China is essential for Apple. How essential is it?
Well, I think very, very much so. I mean, if you look at where their growth is coming from, it's in these developing markets like China, like India. And I mean, you saw Apple really struggling the last couple of quarters in terms of gaining market share. There's a huge amount of competition from smartphone makers domestically like Huawei and others. And so if they can prove that there is a sustainable quarter-over-quarter growth of market share within China, then they should look pretty solid. But it really takes more than one quarter to prove that out.
And also, Tom, the numbers that they put up in terms of the iPhone projections, what was your feeling about how much clarity Tim Cook could give about how many of those devices will be produced and sold in total for this company?
Yeah, I mean, there were strong projections in the last earnings call, and so it looked fairly solid as far as that goes. But there's a lot of questions, especially with the iPhone 10, about manufacturing and whether they can meet demand. There's obviously supply chain questions given all the complex components there. So, if we can see, again, them being able to meet demand, and if China does, in fact, show strong demand for the iPhone 10, then, it's very, very possible this growth could be continued.
All right, guys, thank you. Tom Dotan and Ryan Reed there as Apple closed today nearly at an all-time high. Berkshire Hathaway is out with its earnings a little bit earlier than usual. Dom Chu has those numbers. Dom?
A little bit earlier than usual, but the numbers are still big, even on a per-share basis, Kelly. So let's get you to the numbers here. First of all, Berkshire earnings per share is a narrow miss in terms of earnings per share. It's $2,094 per share. Average analyst estimates were $2,402.47 per share in terms of the overall estimates. We should also point out that many of the adverse impacts of the hurricanes and earthquake in Mexico took their toll on the numbers in terms of Berkshire's numbers overall. They say $3 billion in pre-tax underwriting losses on those 3 hurricanes, Harvey, Maria, Irma, as well as the Mexico earthquake. That translates into $1.9 billion on an after-tax basis. Another number that a lot of investors like to look at with regard to Berkshire earnings is the book value per share. They note that in this past quarter, book value per share was $187,435 in terms of every Class A share. We should point out that those shares closed at $280,470 in regular trading. No trading right now of the A shares aftermarket for size reasons, but we are seeing a little action in the Berkshire B shares. They're down about 1% on 23,000 shares of volume. Also want to point out as we kind of go through these numbers, we did see a revenue beat from Berkshire, about $60.5 billion. Analysts were looking for, on average, $59.79 billion. So we're going to parse through this a little bit more, the details and the numbers. But for right now, it looks like a earnings miss, a revenue beat, $3 billion in terms of write-offs, in terms of the underwriting side of things because of natural disasters. And that's where we get to those numbers for book value. Kelly, back over to you guys.
Dom, thank you very much. Dominic Chu. Let's get some reaction to these numbers from Fast Money's Guy Adami. What do you think,
Cal?
Guy?
I think it's I think it's okay given the hurricanes, given what my man Dom Chu just said. I don't think it's a disaster at all. I think the fact that I'm doing back of the envelope stuff here, but the fact that their book value was up about 9%, from the beginning of the year indicates that the old man hasn't lost a lot on his fastball. So, you know, you sort of stay the course. That's been right. Can't trade it, that's for sure. You know what I'm talking about? So stay the course. I think it's fine.
You can trade the bees,
right? I know. I'm kidding around. I mean, come on. Help. Work with me.
I just wanted to clarify, make sure I'm following, Guy. You're ahead of me. But let me catch up to you and do a little takeaway, don't you think, while you're here? We begin, because in Mike Santoli's absence, Guy, thank you for joining us. Anyway, we begin with nervousness in the private equity industry over the GOP tax bill. They think it could stunt leverage buyouts because it caps interest deductions over 30% of EBITDA or earnings. Is the sell-off in names like Apollo and KKR justified, Guy?
You a fan of REM, great 80s band, Michael Stipe out of Athens, Georgia? Of course you are. Of course you are. Because they sang a song. I'll give you the name of the song. You want to hear the name of the song? Everybody hurts. Everybody hurts. You know, and private equity hurts too. Too bad, they'll figure it out. And is the sell-off overdone? If you look, I think Apollo was up 1.5%. I think KKR was up 2% today. And both of those stocks have been on a nice trajectory higher. So in my world, it's not a sell-off at all. And if they're complaining, they got other things to complain about. We're all in the same boat there, people.
Speaking of Apollo, the company is reportedly looking to buy Qdoba from Jack in the Box. Now, given Chipotle's recent stumbles and the changing tax rules we just mentioned, Guy, does that deal make sense to you?
I think it makes a lot of sense. I think it makes a huge amount of sense. Why? Because Qdoba is the shining star. It's the diamond. It's the cherry on top of everything that Jack in the Box has. If you look at the reason that Jack in the Box has performed as well as it has, it's because of what's going on at Qdoba. Put that on top of all the misses and all the bad things going on at Chipotle, CMG, and if I'm Jack in the Box, I'm not eager to sell Qdoba at all, because without Qdoba, Jack's got Jack.
Okay. By the way, Chipotle down about 2% today. Jack was higher, but I think I know where your sympathies lie. Next, Pizza Hut is not seeing a hit in sales because of issues with the NFL. Recall that Papa John's, a big NFL sponsor, lashed out at the league for not handling the anthem kneeling well and hurting its sales. But Pizza Hut parent company Yum Brands said they've even seen an uptick in sales from live sporting events like football. What's the trade here, Guy?
I think the trade is, I think Papa John's messed up a little bit here, Kel. I will tell you, I understand that they are a sponsor of the NFL, but I would submit, and I might be wrong, I typically am wrong, that Papa John's needs the NFL more than the NFL needs Papa John's. So in my world, don't bite the hand that feeds you. And the play all along has been Domino's comes out DPZ, a Steve Grasso favorite. Why? Because they are now a technology company. My advice to Papa John's is,
for a couple of years now,
take a step back and rethink this whole thing you're doing.
Or maybe invest in technology if that's what's working.
Maybe invest in technology.
Nielsen is releasing its Netflix ratings, which Netflix doesn't accept, but it does show about 15 million people watch the season premiere of Stranger Things. And the season as a whole, Guy, averaged around 9 million viewers. Should Netflix embrace this transparency, and what does it mean for the stock?
Netflix absolutely should embrace the technology and be transparent. And what does it mean for the stock? It means, despite what people say, Netflix has a moat, and that stock will continue to go higher, Stranger Things or not.
All right, there it did close at 200 on the button. Guy, thank you very, very much. Appreciate it. And that instant reaction to Berkshire, too. You got it all. Catch Guy and the rest of the Fast Money crew tonight at 5 with one of the street's biggest Bitcoin bulls to talk about why he's become cautious on the cryptocurrency. Coming up here, Broadcom is reportedly interested in buying Qualcomm, and both stocks are rallying on these reports. Find out if that deal makes sense for shareholders of both companies. It's time now for a CNBC News update. Let's get over to Sue Herrera. Sue?
Thank you very much, Kelly. Here's what's happening at this hour, everyone. Congressional Democrats continuing their assault on the House Republican tax reform bill. Senate Minority Leader Schumer blasting the bill for hurting working families, adding 200 new London police officers. He was accompanied by the London police brass. Afterwards, he met with graduating officers and also the police liaison officers who responded to that Grenfell Tower fire earlier this year. You're up to date. That's the news update this hour. Kelly, back downtown to you. Have a great weekend.
Thank you very much, Sue. You too. Sue Herrera back at headquarters. News breaking this afternoon. Broadcom is considering making a bid for Qualcomm. It would be a cash and stock deal for about $70 a share. Qualcomm closed higher by 12%, still only trading about $62 a share right now. Joining us on the phone with his reaction is Tom Zapenzis from Northland Capital Markets with a buy rating on Qualcomm. Tom, are you excited about this deal?
Well, it certainly makes a lot of sense, and it's in the historical keeping with Avago's growth through acquisition strategy. So I certainly think that it would be great for both companies if they could get it done. But I think there might be problems getting it actually closed.
Antitrust problems?
Yeah, I would think that there's going to be a number of issues. Qualcomm's already run into some issues with the acquisition of NXPI. And that will only complicate matters with Broadcom trying to buy Qualcomm. Is what happens there with the NXPI acquisition? Does that go through? Is it part of the deal? Does it get dropped? So there's a lot of moving parts here between the two companies that will make it difficult.
Yeah, absolutely. NXPI has some expertise in automotive, as I understand it. So if they were to be jettisoned, does that worry you? Is a Qualcomm bull here?
No, actually, it wouldn't worry me at all. As far as Broadcom and Qualcomm merging, there's tremendous synergies between the two companies, and surprisingly, not a lot of overlap. You got Qualcomm, which makes the basebands of the chips that go into the phones, the brain, so to speak, of both the radio and the processor. And then you've got Avago that does the radio frequency side of it. So from that perspective, there's really no overlap. It would be a really synergistic merger. And similarly, Broadcom is much more involved in the server business. Most of that is using Intel-based components, whereas Qualcomm is the first company to actually get an ARM server, into at least sampling. So there would be no overlap there. Again, a very nice synergy for the combined company.
We saw that Intel was lower today by more than 1%. Why do you think it would be selling off on this deal if it was?
Why would Intel be? Well, it would, the combined company would have a pretty similar market cap, right, to Intel. So it would give them a rival that was equal in size and probably a lot bigger in terms of scope of what they could do. So certainly would put some pressure on Intel. I don't know that it would be, direct on their processor business or their server business, in the near term, which is still 85% of their combined business. So I don't really see this being a real problem for Intel as a direct threat.
And Tom, I'm wondering what you think about the $70 share price that's been mooted when this company traded at 80 a few years back.
Yeah, it's certainly lower than what Qualcomm would probably want, and I can't speak to whether that's the real price or even if there's going to be a bid, but it makes sense in the current environment in terms of the premiums we've seen other semiconductor companies go for over the last couple of years. But obviously Qualcomm shareholders will probably want to try and sweeten that deal.
Does it make sense for them to sell below 80, below something above that? Again, that was something that was achieved a couple of years ago. Why is it now seen that this company might be less valuable than it was?
Well, clearly, they've got a lot of legal issues going on right now, not only with the American and the Taiwanese and the Korean free trade organizations, but also with, one of their biggest customers, Apple. So that has really eaten into their market cap. It's eaten into their value. It's got a lot of people concerned over their business model and what the eventual impact will be. I myself have an outperform on the stock because I have covered I've covered Qualcomm for the better part of 20 years, and I've seen them run into these legal issues before with Ericsson, with Nokia and others, and generally speaking, they come out victorious pretty much every time. So I do think that they will, likely emerge better than people are expecting here with this Apple dispute.
All right, and we'll see what emerges with Broadcom, too. Tom, thank you very much for your time.
Thank you. Appreciate it.
Tom Sapenzis joining us from Northland Capital Markets. Meantime, retail jobs are one of the biggest weak spots in the October jobs report that we got this morning. Up next, we'll look at whether problems with retail could end up putting the broader economy at risk. And several popular employee tax perks will be repealed under the proposed Republican tax plan in Congress. We'll tell you what they are. Includes corporate gyms. See how you could be impacted later on the Closing Bell. Welcome back. Closing out the week with gains mostly across the board on Wall Street. Russell was lower up by a point, but the S&P was up 8. The Dow was up 23. The NASDAQ was up 49. And for the major averages, those are all record highs for the Dow and the S&P. It is their 8th straight week of gains. The first time in 4 years the markets have achieved that. The retail sector losing 8,000 jobs last month, and it's the 8th time in 9 months that there's been a drop. And we could hear more about job losses next week when we start to get earnings from a number of retail companies. What impact could the job drought have on the overall economy? Joining me now is Chris Lowe from FTN Financial and CNBC contributor from J. Rogers Niffen, WWE. Did I get that right? Anyway, Jan Niffen is here. Thank you both for joining us. Chris, let me just begin with you. I mean, 8 months out of 9 now is a big deal in terms of a retail streak of job losses. How much of an impact do you think that's going to have more broadly?
Well, I think it'll probably be isolated to retail. The thing is that consumption lost quite a bit of steam early last year, dropping from 4% growth to about 2 3/4. But it's been stable since then. So this ongoing weakness, 66,000 jobs lost so far this year, is pretty clearly a reflection of something going on within the industry. And I suspect it's the Amazon effect. You know, it's online retailers eating their lunch.
And Amazon itself, you know, its headcount is expanding. I mean, Chris, that's the interesting thing. You know, in a way, now especially that it's bought Whole Foods, its headcount it's getting up there. There are 541,900 employees. I think Walmart has 2 million, but Amazon itself is turning out to absorb a number of these job losses, don't you think?
Oh, I think that's absolutely right. And remember, they are included in that survey. So take Amazon out, and they've added about 25,000 this year, and the losses mount to 90,000 in the rest of the industry. If you've seen an Amazon fulfillment center, they are enormous, and they're very lightly staffed. And I think that's the key to what's going on. They are simply way more efficient at getting goods out to customers with fewer people. This is a huge productivity gain in the sector, but while we're in transition, it is costing jobs.
So, Jan, what do you think this sets us up for as we get into retail earnings season?
I don't think that's an issue. The retailers themselves aren't as healthy as they should be. The consumer is very healthy. The consumer's got better job picture they've had in a long time. They may not have much in the way of rising wages, but a little bit of that. Unemployment's low, employment's high, energy costs are low. The consumer's in good shape, and we're going to see fine growth in the fourth quarter in consumer sales. What we're not going to see is it in the retail sector that I'm used to, which is the brick and mortar sector. They're going to continue losing jobs. We've closed 6,500 stores this year already. We've only opened about 3,000. That's going to cause job losses. And as your other guest just said, when Amazon adds a person in the distribution center, about 3 people go off of the floor of retailing, because that's how much more efficient those distribution centers are, and they're not running stores. So, yeah, they continue to grow, and then the retail jobs continue to shrink. But it's not something wrong with the consumer.
Is it something that, from an investor point of view, knowing how challenged some of these companies are, is it better for them to shrink their headcount in order to try to just stay as profitable as they can while they contend with what sounds like a secular decline?
Yeah, there's no option. They have to shrink. They have to be more efficient. They have to try to make money online, which is really hard. After all, Amazon doesn't make any money online either. And so it's very difficult in that environment. So they keep shrinking the base, trying to be more efficient on costs and moving more and more business online, which is low profitability. So it's a difficult place to be if you're a brick and mortar retailer, given that.
Yeah, and we're going to get a slew of them headed our way next week. Nordstrom, Macy's, JCPenney. Guys, we'll let you go and we'll see what happens. Thank you for joining us. That's Chris Lowe and Jan Niffen. Donald Trump embarking on his 12-day tour of Asia today, and there's a lot at stake for business, both big and small. Why hordes of small and medium-sized companies are hoping Trump's trip is a success coming up. And on this Jobs Friday, we want to hear your job interview horror stories. You can email us, Facebook, tweet. You can see it all there, and I may read your tale on air in today's Closing Bell mailbag. We'll be right back. We have a news alert on Harvey Weinstein. Julia Borston, what now?
Kelly, the New York Police Department saying it's building a case against movie mogul Harvey Weinstein following a range of accusations, including sexual harassment and rape, including a recent one from actress Paz de la Huerta, who accused Weinstein of raping her twice in her apartment in 2010.
We have an actionable case here. So we're happy with where the investigation is right now. Mr. Weinstein is out of state. We would need a arrest warrant to arrest him. So right now we're gathering our evidence. We continue to do so every day.
Police say they just became aware of this latest accusation on October 25th. We've reached out to Weinstein's representatives, but have not yet heard back. Guys, back over to you.
Thank you, Julia. Julia Borston. Well, there's one key issue many U.S. companies want President Trump to bring up on his trip to Asia. We'll tell you what that is right after this. House Republicans revealing their tax plan yesterday, and some employee perks could be at risk if it passes. Ilan Moy joins us now with a rundown. Ilan?
Kelly, it is the little things that'll get you. We have spent so much time talking about the corporate rate. Is it temporary or permanent? Is there a connection between profits and wages? But sometimes you just need to know, can I still deduct my parking? And the answer, at least right now, is probably not, because this bill takes a whack at a lot of popular perks. Transportation fringe benefits is one of them. Another biggie, tuition assistance. Under current law, your company can give you up to $5,250 annually to pay for school. You aren't taxed on that benefit, and your employer doesn't have to pay federal payroll taxes on it either. That would go away in the GOP bill. Moving expenses. Kelly, let's say you get a dream job at Apple, not that this isn't already your dream job, but you relocate from New York to Cupertino, you won't be able to deduct your moving expenses anymore. They are even coming after employee achievement awards. That's when you've been with the company for 10 or 20 years and they give you a gold watch or a new set of pots and pans. Yeah, that's now taxed too. So this is all just a numbers game. There's at least $30 billion of revenue over the next decade in getting rid of these perks. And that is a drop in the bucket compared to the $1.4 trillion price tag of the entire bill. But Republicans don't have a lot of wiggle room here as they try to make the math work, Kelly. Every billion counts. Back over to you.
If I have to pay taxes on the 5 or 10 on the toaster, I don't want it. They can
Your toaster of it.
Yeah, I'm trying to remember what I even picked out. Elon, these all-nighters on tax are catching up with you, aren't they?
Yeah, they are. The tax tsunami is taking a toll on my throat, apparently.
Anyway, it's fascinating stuff. I had no idea so much of this was at stake. And even for employer gyms, I wonder, are they just going to shut them down? I mean, how important are these deductions?
Well, I think this is just a good reminder of how far-reaching this bill is, and you just don't know which tiny provision is going to crop up and become potentially the poison pill in the entire bill. There's another provision that's getting a lot of political buzz right now, and that's one that allows you to begin contributing to a 529 for your unborn child. And it seems like it makes sense because you want to start saving as soon as possible for college, but it raises a lot of thorny moral questions about when does a fetus become a person. So that's another one. Seems like a small line item, but it's becoming really politically divisive.
I had no idea. Elon, thank you very much.
Dig through the tax code, Kelly.
Holy cow. All right, Elon Moy, really appreciate it. Meanwhile, as Steve Mnuchin, Gary Cohn, and Ivanka Trump hunker down in Washington to work on that reform, the president is heading out on his 12-day trip to Asia. Kayla Tausche has more. Kayla?
Kelly, Treasury just announced that Ivanka Trump will be joining Secretary Mnuchin in California over the weekend for some tax reform events, while her husband, Jared Kushner, and of course the president's senior advisor, will be accompanying Trump in Japan, South Korea, and China. That's according to a White House official. National Security Advisor H.R. McMaster said yesterday that Bob Lighthizer, the U.S. Trade Representative, would be leading economic talks during the trip. Commerce Secretary Wilbur Ross will be bringing more than 24 CEOs for a trade mission to China. And also spotted on the plane this morning, national security officials Dina Powell and Matt Pottinger. One trade issue that White House officials say Trump will address on this trip is intellectual property theft. That's the focus of an ongoing investigation by Lighthizer. And that's top of mind for people like Drew Greenblatt, whose Baltimore Steel Company sells baskets and racks to Walmart and Merck, and checks Google Images every single week to police Chinese competitors copying and stealing products from his website.
Think about it. If somebody were to stick their arm through the internet and steal your car or steal your TV, you'd be outraged. Well, that's what's happening to Marlon every day. They're taking their hand through the internet and stealing our intellectual property and representing that it's themselves. And they're winning jobs. And because of that, they're growing jobs in China rather than us growing jobs here in Baltimore City.
Tensions running high in the region, the North Korean threat on the horizon. Trump's going to spend the weekend in Japan, and then South Korea is where he'll go on Monday. Pyongyang called an overnight military flyover by those three allies a move that was, quote, seeking to ignite a nuclear war. Kelly?
And it threatens to overshadow the whole trip. Kayla, thank you. Kayla Tausche. A new poll revealing some surprising truths about the hiring process. Those details and some of your job interview horror stories are next.